What is up, you guys? Pete DiCarlo here, helping you grow your portfolio one trade at a time. And today, I didn't want to set up the normal lighting and camera and everything. I wanted to just sit down and have a conversation with you guys on something that not a lot of people are talking about. It's why the stock market is not crashing, right? If we take a look at SPY, this is a one-year chart. We were trading around $340 per share. Back before the whole, Rona situation happened. We took a 40% fade to the downside, sold off to $218. And ever since then, we've had nothing but a strong comeback. If you look at the economy, it is nowhere near where it was before Rona, but for some reason, the stock market is just as high as it was before. And even if we take a look quickly at the nasdaq, it's actually way higher than it was before the whole Rona situation. So why is that, right? Why is that? If we look at travel's still getting killed. If we look at, corporations, people are still working from home. A lot of corporations are still getting killed. If we look at restaurants and bars, a lot of them have gone out of business. A lot of those businesses, if they're still in business, are not doing well. The economy is not in great shape. And a lot of this comes down to three things. First reason that we are seeing that the market has not crashed yet is because the big companies that are holding the market up are doing amazing. So you can see here, this is the S&P 500. I go to Analyze. If you use TD Ameritrade, I highly recommend it. And we're going to put SPY. What you're going to see here is the top 50 companies within the S&P 500. I can actually show you the top 100, and let's just kind of go through them. First one, Apple. This makes up for close to 6.4% of the S&P 500. Apple is doing amazing. Microsoft makes up for 5.75% of the S&P 500. Another company doing amazing. Amazon, 5%, doing amazing. Facebook, 2.5%, doing amazing. Google, doing great. J&J, doing all right. Procter & Gamble, doing, okay. You can see that at least the top 6 holdings within the S&P 500, Apple, Microsoft, Amazon, Facebook, Google, all of these companies are not even just doing okay, they're doing better than they've ever been. So while you have the rest of these companies that are not doing well at all, right? I'd say probably about 75% of the companies within the S&P 500 are not doing well. Well, the bulk of them, 25%, is not only doing well, but doing the best they've ever done. So that's why we're seeing the S&P 500 continue to climb to near record highs, even though the economy is nowhere near where it should be right now. Now, the second reason that we have not seen a crash in the stock market yet is simply because of Jerome Powell and the Federal Reserve. We just continue to print more and more money. So for those of you who do not know, back in 1971, up until that, every dollar that was printed in the United States was backed by gold, which means that essentially it had worth. There was a reason why the US dollar was so strong before. And, nowadays that's not the truth. After 1971, we did not have to back any of our money in order to print it. So keep printing more money, and it doesn't help the dollar. That's why we see gold is at an all-time high right now, because the more and more that you print, the more and more you dilute, the less and less the dollar actually becomes. But there's a pretty staggering statistic. I'm going to link the interview down below with Danielle DiMartino Booth. She talks about essentially the numbers that I'm about to refer to, but it's pretty crazy because when you look at the average American, right, everyone who makes under $40,000 per year, and think about this to yourself, right, they have reduced their spending habits by 6%. That's it. That is not much. Essentially, nothing has really changed for anybody who makes less than $40,000. You are probably still spending the same amount of money you were spending before this all happened, except for maybe you're not going out to dinner as much. Maybe you're not, taking as many vacations. For people who are making more than $50,000 per year, they have cut their spending, I think, by almost 45%, which is crazy. So essentially, the people who are making the most amount of money in this country, they're not spending it. But the people who are not making a lot of money, they are spending it, and this is helping to prop the economy up. As well, what happens when the Federal Reserve prints money, and specifically in the stimulus bill that happened back a couple of months ago, the Federal Reserve is bailing out companies. From a first glimpse at this, you would think that yes, companies, they don't deserve to go out of business. These companies have been impacted by the coronavirus. We need to help them. We need to get them money. There were a lot of companies that got bailed out, and I mean a lot of them, that were bad companies before this whole Rona situation happened. So essentially, we are just wasting money, delaying the inevitable, bailing out these bad companies that should have went out of business anyway, and we shouldn't be helping them. As mean as that sounds, right? That's capitalism. That is how it works. There are a lot of businesses that were once great. Look at a Radio Shack, look at a Blockbuster, look at a Sears, that eventually go out of business, not because of a recession, not because of a pandemic, but because they were going out of business anyway, because it was a failed business model. And we're wasting a lot of money bailing those people out. But that is pushing the stock market up. Also, we have more money in the pockets of Americans who are putting their money in the stock market. Essentially, this is the best time for anybody to start investing if you're a retail investor. And a retail investor just means you're not part of a hedge fund, you're not on Wall Street, you're somebody like you or me. And you can see this was documented over a year ago. And this is saying that Robinhood has topped over 10 million accounts. And I'm telling you guys, there is way more than 10 million people using Robinhood right now. Specifically, look at how many of your friends, how many people in your family, how many people online have been investing more that you never saw, right? That is problematic. That will inflate stocks. That will inflate the market, because you're not going to see what the stock market should be trading at if you have so many big hedge funds getting greedy, pumping money into it, so many retail investors pumping money into the market. That's not how this is supposed to work. So we are seeing overinflated stocks and essentially prices that do not have a direct representation of where the stock market is right now. And now I understand that the stock market doesn't trade off of the value of what something is worth right now. That's the beauty of it. It trades off of what the value of the company is in the future. But this is holding the market up and not allowing us to get this kind of W-shaped recovery that we should be getting. And now the final reason that the stock market has not crashed yet is because we have had this unemployment going into the money of people who are either unemployed or not working a lot right now. So, up until right now, every single person on unemployment got a $1,200 stimulus check. That's every American if you made less than $70,000. And on top of that, you were getting $600 per week from the U.S. government. This is more money than most of those people even made at their job, right? For some people, of course, and for some others, that might not be the case. They might actually be making less money. But if you're somebody who is a chef, if you're somebody who is a bartender, if you were a waitress or somebody, and you're getting this, then you're making more money than you were before. And like we said, if you're making less than 40 grand a year, your spending habits probably have not changed that much, but you're actually getting more money. Therefore, you're siphoning more money into the economy. Therefore, that's propping it up on a mass scale. The problem, however, is that as of last Friday, there is no more unemployment checks. So therefore, the government has to really scurry to put a deal together. And the Democrats and the Republicans are kind of not budging, right? They're both okay with the $1,200 stimulus, but they're arguing, I believe, over unemployment. The Republicans want to spend less money. They want to only give $200 per week. The Democrats want to give $600 per week. So this week is going to be a big week because if a deal does come together, then we're probably going to see the stock market continue to push up. If we don't see a deal come together and they kind of just turn their backs on everybody, then we're probably going to see the stock market fade. And now, the title of this video might make it seem like I think the next big crash is going to happen. I'm not saying that we're going to see a 40, 50, 60% sell-off and that there's this doom and gloom issue like a lot of people are going to put on the internet because they want to get clickbait and video views. I'm just saying that I'm not trusting a lot of companies long-term right now. I'm not trusting the stock market right now. I'm not trusting the US dollar right now, right? I can't get Bitcoin on my screen right now, but look at how much cryptocurrencies have gone up in the past couple of weeks. Look at how much gold has gone up in the past couple of weeks. That's not for no reason. That's because people do not trust the United States dollar. And if you're part of my private stock market academy, I've talked about this a lot. We might get to the point where other countries don't want to trade with us because the more and more that we print money, the less the money we have is worth. And why would you want to do business where essentially, think about if you're China and you're collecting our money, why do you want to collect money that is losing essentially value? Why would you want to collect an asset that's losing value over time? Because if America just needs more money, they're just going to print it. And at this point, they're not even printing it. They're literally just writing it in the Fed balance sheet, plus $2.5 trillion. It's insane, guys. But that is my take. That's why the market is not crashing. Now, when is it going to happen? Who knows? Nobody is going to predict it. It could happen 2 weeks from now. It could happen 6 years from now. Honestly, it might be 6 years before all of this comes to fruition, before we see all the problems that we're seeing right now actually hit the fan. And so I want to hear from you guys. I want to know, what do you think? Do you think that the stock market crash is coming soon? Do you think that everything is going to be fine? Do you think that some of the points I'm bringing up have validity to them? And do you think that this is why the market's being held up? Or do you think I'm a complete idiot and you want to hit that thumbs down button? Do whatever you want, guys. Thank you so much for watching. Until next time, I'll see you.